Hello and welcome at Value Investing, where we try to estimate the intrinsic value of different companies. In today's video, we will have a look at Unilever, a company in the household products and consumer defensives. But first of all, the usual disclaimer, this is no investment advice, this is just my personal opinion. And I got some comments below the other videos that the Excel is too small, so I have increased the size, and if the size is better now and more readable, please leave a comment down below so I can improve the video quality even further. Without further ado, let's hop right into the video. If you do not know Unilever, this company is up around 14% over the last year and they sell consumer goods. They have different pillars for their revenue, from beauty and well-being up to ice cream, and some of their well-known brands are Dove, X, Rexona, Knorr, Magnum, Ben & Jerry's, and so on and so forth. Pretty well-known brands, everyone uses at least some of them at some point in time, so really consumer goods. Now let's hop into the stock valuation. As usual, we will have a look at Unilever with 4 different valuation models. But first of all, we see that the dividend is around 4% with the current trading price, and also the payout ratio is at a healthy 57%. Unilever itself trades around $52 currently, and they more or less consistently manage to grow their earnings per share over time. One small disadvantage of this company is that they do not regularly buy back shares. So since 2010, there were no share buybacks at all. Just to keep note of that. Now let's start with a valuation from Benjamin Graham, where we use the revised formula based on the earnings per share, a growth rate projection, and the current yield of AAA corporate bonds. Considering all those parameters and the revised formula, we get an intrinsic value of $42. Now let's hop into the multiples valuation, where we compare Unilever with other different companies with similar products. I have used as a comparison Procter&gamble, Nestle, Coca-Cola, and the Kimberly-Clark Corporation. They have a price earnings multiple from 23 up to 31, and this brings an average price earnings multiple of around 27. If we multiply that with the earnings per share from Unilever, we get an intrinsic value of around $88. For the discounted cash flow analysis, I've considered the historic free cash flow from Unilever, and they have an average growth rate of around 0.49. I have projected a bit of a better growth rate for the future of around 2%, and calculated the future free cash flow based with this growth rate projection and also the present value of the future free cash flow. And considering the sum of the future free cash flow, their cash and cash equivalent, and also their total debt with their outstanding shares, we get an intrinsic value of around $41. The dividend discount model considers the yearly dividends of Unilever, and as we can see in the growth rate, they also sometimes tend to decrease their dividend instead of continuously increasing if they think the company is not in a too healthy state. They do not focus on a consistent growth, but the average growth rate is around 9%. And I have projected a more or less pessimistic growth rate of 5% over the next few years. This brings us to an intrinsic value of $90. Now let's hop to the output tab, where we have the 4 different valuation models from Graham's valuation up to the dividend discount model. And if we average all of those together, we get an intrinsic value of around $65. If we apply the usual margin of safety of around 20%, we get an acceptable buy price of around $52, which is very close to the current trading price. If you would like to buy it with a margin of safety of 20%, you have now the chance. This again is no investment advice. This is just my personal opinion. I would be interested what you think about Unilever in the long run. Please leave a comment down below, and also if the Excel is now more readable, especially from the mobiles. Thank you.